Don't do list. Now, as a mortgage advisor, I have worked with tons of clients, and it's amazing how many people do these things when they don't realise. I've had people lose their mortgage offers after they'd received them because of some of these things on this list. I was really frustrated, so I was moaning to my husband about it, and he was like, do you know what? Why don't you do a list? So I've done a list, and if you put in the comments list, I will send it to you. But I'm going to go through it just a little bit. So there are things that you shouldn't do 6 months before you purchase a property, 3 months before, when you get the mortgage offer, after you get the mortgage offer. There are loads of different stages where there are things you shouldn't do. And I shouldn't get annoyed with my clients, because at the end of the day, you don't know what you don't know, right? So, my name's Manda. I call myself the mortgage coach because I combine mortgage advice with financial coaching. Now, let's go through some of the mistakes or things that have happened to my clients. And hopefully, if you're a first time buyer, you'll learn and you'll understand what not to do in order to make sure that the property completes, you get your keys, you move in, and there are no troubles. Now, we'll start off with 6 months before. Right, so 6 months before, and I mean 6 months before you apply. Changing jobs isn't always the best thing to do. It really does depend, but some lenders, they want to be safe, they want to be secure in their decision. So if you can wait till after you've completed, then by all means change jobs till the cows come home. I once had a client who said to me, is it okay? I've been offered a job that's more money and I want to take it. And I was like, you know what? It's not a problem. But I should have actually explained that if you're going from one job to another, if you want to take a week or 2 weeks, not a problem. This person actually took 6 weeks break, and it wasn't like a teaching role or something like that, which you'd understand a 6 week break. But the lender actually wasn't interested anymore because they were like, do you know what? It looks like that they've got unstable income. So that's one thing to think about. The other thing is, someone I know was employed, they got made redundant, and instead of just getting another job, they decided to go self-employed and have independent clients. Now, once you go self-employed, you need 2 years of accounts. So they went from needing 3 bank statements to having 2 years of accounts. So that was really, really difficult. We had to just put everything on hold till they had their 2 years of accounts. Now, in some industries, it's not an issue. Like if you're a plumber and you go from being employed to self-employed, sometimes they'll show, because it's a trade, they'll show it as continuous. But in some roles, especially if you change from being an employed marketing executive to being a self-employed consultant or something like that, and they don't see the roles as similar, you may have a lot of trouble. The next thing is, and I see this all the time, taking out credit. I once had a client that thought they were doing the best thing. They changed all their credit cards in order to do balance transfers, but unfortunately the old cards never got cancelled. The new cards came on. So instead of just having 3 credit cards, they had 6 credit cards. Some credit companies, lenders, actually judge you by your credit limits, not by your credit balances. So when they see all of these limits on all these 6 cards, it was actually more than the person earned their limit allowance. And even though I said to them, yeah, but 3 of these cards have 0 balances, they're like, to be honest, we don't really care. And it was one of the big high street lenders. I said at the end of the day of completion, they could max out all 6 of the cards, and then they maybe not be able to afford the mortgage. So as a responsible lender, we unfortunately can't lend this client. The other one is living in your overdraft. When I actually called a client out on living in their overdraft, they said, but it's free money. At the end of the day, I know going into your overdraft doesn't seem a big deal, but unfortunately it is a red flag to lenders because they think to themselves, do you know what, this person can't manage their finances, that they need to go into their overdraft every single month. So that's another thing. Missed direct debits. So a lot of people are like, if you are in your overdraft or you haven't got an approved overdraft, or I know one person, they had one account that they paid all their bills and they had another account that their income came into, and they thought it was quite good because every month they moved a set amount of money out of that account to cover the bills. But then they went on holiday and they forgot, and all their direct debits bounced. And unfortunately, when lenders asked for the 3 months bank statements, it was one of those months. So that was very difficult. We ended up having to wait till they had 3 months worth of clean bank statements. Another thing to concern about is old addresses. So a lot of people, when I first start with my client, I always ask them to actually look at their credit reports and actually look at the detail. Now, if there's stuff, they saw an old address on there and the dates were the wrong dates, they had moved out at least a year before, but the dates said that they were still there at that point. But they thought, well, it's an old address, it's not relevant. But then there was a utility bill for that address over that period, and they were the ones being penalised for it. It went on their credit file. It then got brought up when I was applying for a mortgage for them, and the lender saw it and said, at the end of the day, you're not paying your bills. And it was really difficult to get the utility company and the electoral roll and everybody else to prove when my client moved out, and the fact that the bill wasn't theirs. By then, unfortunately, they'd lost that property. Sometimes you just can't turn it round quick enough. So those are do's and don'ts that are 6 months. When it's 3 months, a lot of it is similar. The other thing is they really look, as I mentioned before, at the last 3 months bank statements. So things that I talked about in the last 6 months that could affect, that are on your bank statements that could affect your credit. But these are things that when they're looking at your 3 months bank statements, they look really, really bad. So, for example, when you've got very large unexplained transfers. Now, I once had a client who would transfer a set amount of money every single month into their savings account, save up a deposit. That isn't an issue. But when you've got transfers that you're transferring to friends, or friends are transferring back to you, and there's a little of ambiguity about it, it does raise red flags with lenders. So I would just stop all of that. It isn't, you can take a break. When you're moving money, as I said, between friends and family, if you've got a direct debit set up, they can see that as a committed expense. So, for example, I once had a client and she earned really good money, but she had a direct debit set up to her mum, she had a direct debit set up to her dad, she had a direct debit set up to a couple of friends, and she used to give them money every single month, which was really, really sweet. But at the end of the day, the lender actually penalised her and reduced her affordability by those direct debits, because as far as they're concerned, they were committed expenses. Even though she said she could stop them at any time, because there were 1, direct debits, and 2, she had a history of doing it, they felt there was more going on in the background. I tried to explain it was a cultural thing, and some people just do that for family and friends, but as far as they were concerned, it is a committed expense, and there's no way that you could stop doing it at any time, which was what we were trying to argue. So that is 3 months before. And as I said, 6 months before, it's all about the credit report and getting that all squeaky clean. 3 months before, it's all about getting the best 3 months bank statements, the cleanest ones that you can get. Now, the next one is during the mortgage application. So during the mortgage application, when I or your mortgage advisor is applying for your mortgage on your behalf, things not to do. I know one person, they got their decision in principle that said they could afford, say 250,000, and then they were actually doing a right to buy. So the property that they already live in is the property they were buying. They went on a big shopping spree because they're like, great, I'm going to be owning this house now, not renting it anymore, and I want it to have all new furniture. So not only did they go on a big shopping spree and max out their credit cards, but then once they'd maxed out their credit cards, they went and bought the furniture Some of the bigger pieces of furniture couldn't be covered by the credit cards. So a very nice gentleman at the shop, at the furniture shop, said, you know, you could split the payments over 3. Now, she didn't realise that that actually goes on her credit file, buy now, pay later. So she ended up having quite a few of those. And then she does a lot of online shopping with Klarna. I think she had 17 of those. So basically, it wasn't good. So even though the decision in principle had said, in principle, based on this information, we can lend X, Y, and Z, by the time we actually got to the full mortgage application, her credit profile, her credit commitments, her affordability had completely changed, which you don't want. Now, the next stage, of course, is after mortgage offer. So after mortgage offer, before completion, then yeah, this isn't the time to hand in your notice. I had a client do that once. I think I mentioned that previously. It's not the time to, you know, start doing up the property. Some do it after they get the decision in principle. Some people do it after they get the mortgage offer. You know, it isn't worth it buying stuff and then saying, oh, deliver it in 3 months. I know one of my clients, she was hoping to complete before Christmas, and she was a bit concerned that her furniture wouldn't arrive in time, so she actually bought it as soon as she got the mortgage offer. But unfortunately, if there are delays, so you know when you're buying a property, it's normally in a chain, so you're buying and the person selling is buying, and so on and so on and so on. Now, basically, if the link in the chain breaks or there's delays, then sometimes your mortgage offer may expire. They're willing to extend it, but they'll normally ask for a pay slip and a bank statement if you've done anything. I know one person, they were really good for like 6 months, not doing any gambling or anything like that. They used to do online gambling, and then as soon as they got their mortgage offer, they were like, phew, no one's gonna look at my bank statements anymore. So they went back to their gambling habit, and unfortunately, when they looked at the bank statement and the pay slip, it wasn't as good as it was you know, the previous month, and they actually got their mortgage offer pulled. So that's something to be aware of. The other thing is, and a couple of my clients have done this recently, changing their solicitor. Now, if you're worried about delays or things like that, I understand completely, but sometimes it depends on the lender. But if you change solicitor, it's not as simple as just getting the new solicitor put on the mortgage offer. Sometimes they want to see pay slips, bank statements, and they want to reassess you, because as far as they're concerned, that is a mini red flag. Why are you changing solicitor before you've even started the process? So if you've got a valid reason, like your solicitor has gone on holiday or isn't working anymore or retired or whatever, I don't know, but if they are available, then they're going to want to know why you're not using them. Has the solicitor refused to work with you? Is it a bit of a red flag? So that's something to be aware of. Other things are like travelling abroad, so you're unreachable, things like that, because at the end of the day, once you've got the mortgage offer, it is when the legal stuff starts. So, you know, the searches and exchange completion, all of that stuff is going on. So you need to be reachable, you need to be around. The next point is after completion. Now, a lot of people think, oh, once I've completed it, it's all good. But you just need to be aware. Now, first, your first mortgage payment, double check when that is and double check how much it is. You've been told by your mortgage advisor what the monthly payments are going to be, but depending on when you complete in the month, your mortgage payment could be slightly higher or slightly lower than that. If you complete like with 3 weeks of the previous month, you might get charged 3 weeks worth of interest on top of your normal monthly payment. So make sure you're aware of that. The other thing is, make sure you know the date when the payment is due. It normally is the following month of completion, depending on when in the month you said you wanted to pay, whether you wanted to pay the 1st of the month, the 15th of the month, the 28th of the month. You need to know just in case, because either a direct debit's been set up, and if you don't have enough money in the account, it will bounce, which is never good, or you are paying it differently, not through a direct debit, because you don't know what the amount's going to be, etc. But then unfortunately this could go against you if you don't know the date it's due. Do not go wild with your credit cards. A lot of people are like, woohoo, you know, that kind of thing. And don't ignore like protection, life insurance, critical illness, that kind of thing. You really do need to make sure you've got that in place, because now you've got a mortgage. You need to protect that if you're not working. If something happens, you also need to do a will, because now you own a property. Where does it go if something happens to you? Who gets that? And don't forget to update your addresses. So that would be with your credit file, that would be with your bank, HMRC, anyone really who needs to know your new address. So I've just done a whistle top tour through the don't do list. If you actually want the actual full list, put list in the comments. If you've enjoyed this video, please subscribe so other people also get to see this video and my other videos. Thanks.